Mayuresh, welcome once again. I want to get your take on this entire shipping space, and particularly for names like Garden Reach, something that has doubled in just the last 6 months. The kind of exuberance that we've seen coming in this pack. What is your view here? Because we had seen a good run, then a silent period for some time, and once again they seem to be picking up some steam. What's your take and what's your outlook when it comes to some of these large shipbuilders?
Very good afternoon to you. I think the run-up has been pretty much too sharp for comfort. And therefore, I think a large part of these stocks within the shipping sector itself, or within defense as well, which had gone through a lean patch over the last few weeks, have suddenly started showing signs of recovery. And therefore, I think the expectation in terms of a very strong execution and earnings pickup in the second half, with more orders expected their way, is something that the street is ideally building up with. Obviously, I think the existing order book and the book-to-bill ratios mean that the revenue visibility for most of these players anyway are robust. It is the execution aspect that will probably lead to better earnings going forward. Now, even within ships, I think ship repair is a better business with better margins because shipbuilding itself is a long gestation business with large delivery time periods and revenue recognition periods as well. So again, I think out of the ship routes that you've probably seen because of the disruptions created by tariff, you've already seen a huge move happen in GE shipping. You've seen huge moves happen in SCI as well. Spot rates have definitely gone up. Specifically for tankers, spot rates have definitely gone up, as Sharad was also explaining, for the dry Baltic index as well. And therefore, I think from an earnings perspective, I think they might be a tad bit better off compared to the core defense players as we speak, which again are long gestation projects that are generally carried out. So I think GRSE, Cochin, Mazagon to a certain extent have all the capabilities to probably, or all the triggers probably to ensure that earnings probably remain intact over the next few years. But from an immediate perspective, I think they're priced to perfection.
All right, so